Most people come into trading believing the market is a battlefield of intelligence. They think the smartest trader wins, the one who knows the most indicators, the most strategies, the most secrets. But after years in the market, a different truth reveals itself. Trading is not a test of intelligence. It is a test of emotional discipline. The real difference between smart traders and emotional traders has very little to do with IQ and everything to do with self-control, patience, and the ability to act logically under pressure. An emotional trader enters the market carrying expectations, hopes, fears, and ego. A smart trader enters with probabilities. That distinction alone changes everything. Emotional traders want certainty. They want to be right. They want validation from the market. Smart traders understand that the market owes them nothing. They accept uncertainty as the cost of participation. Where emotional traders search for reassurance, smart traders search for alignment with their plan. Emotional traders often confuse confidence with conviction. They believe strongly in a trade, not because the setup is statistically sound, but because they feel it should work. They fall in love with narratives. They tell themselves stories about why price must go up or must go down. Smart traders don't need stories. They rely on data, structure, and repetition. They know that feelings don't move markets, orders do. When an emotional trader places a trade, they immediately attach their identity to the outcome. If the trade wins, they feel smart, validated, even superior. If it loses, they feel stupid, angry, or embarrassed. Every win inflates their ego, and every loss damages their confidence. A smart trader keeps their identity separate from their trades. A loss is not a personal failure. It is simply one data point in a long series of outcomes. This difference becomes painfully obvious during losing streaks. Emotional traders spiral. One loss turns into revenge trading. Position sizes increase. Rules get bent. Stops get moved. The trader starts trading not to follow a plan, but to erase emotional pain. Smart traders respond to losing streaks by reducing risk or stepping away. They analyze, not react. They understand that protecting capital and mindset is more important than chasing recovery. Fear is another defining separator. Emotional traders fear missing out. They see price moving without them and feel compelled to jump in late, often at the worst possible moment. They fear losses so deeply that they hesitate on valid setups, only to enter after confirmation that no longer offers a favorable risk. Smart traders accept that missing trades is part of the business. They know there will always be another opportunity. They would rather miss 10 good trades than take one bad one outside their plan. Greed plays an equally destructive role. Emotional traders struggle to take profits. They watch winning trades turn into losers because they want more. They imagine how much money they could make if price just goes a little further. Smart traders take profits based on predefined targets or rules. They understand that unrealized gains are not real until locked in. They don't try to capture the entire move. They focus on consistency. One of the clearest signs of an emotional trader is inconsistency. Their results swing wildly. Big wins followed by devastating losses. Periods of confidence followed by burnout. Their equity curve looks like a heart monitor. Smart traders aim for smoothness, not excitement. Their equity curve reflects discipline, not adrenaline. They understand that boring trading is often profitable trading. Another major difference lies in preparation. Emotional traders often rely on impulse. They open charts, scan randomly, and trade whatever looks interesting in the moment. Their decisions are reactive. Smart traders prepare before the market opens. They define levels, scenarios, risk limits, and execution rules. When the market opens, they are not guessing. They are executing a plan already made. Emotional traders often believe more trades mean more money. They overtrade. They feel unproductive if they're not clicking buttons. Smart traders understand that trading is not about activity, it's about quality. Sometimes the best trade is no trade. They are comfortable sitting on their hands when conditions aren't right. They don't force opportunities. They wait for them. Risk management is where the gap widens even further. Emotional traders focus on how much they can make. Smart traders focus on how much they can lose. Emotional traders adjust position size based on confidence or excitement. Smart traders use fixed risk parameters. They know exactly how much they're willing to lose before entering a trade, and that number doesn't change based on emotion. When emotional traders place a stop loss, It often becomes optional. As price approaches the stop, they feel hope. They tell themselves the market will turn around. They move the stop, cancel it, or widen it. What starts as a small, controlled loss turns into a large, damaging one. Smart traders treat stops as non-negotiable. Once placed, the stop is final. They accept the loss and move on without debate. Time frame discipline is another separator. Emotional traders constantly jump between time frames looking for confirmation or reassurance. If the trade doesn't work immediately, they panic. Smart traders choose a time frame that matches their strategy and personality, and they stick to it. They understand that noise is part of price movement and don't let short-term fluctuations shake them out of well-planned trades. Emotional traders often chase complexity. They believe more indicators equal more accuracy. Their charts become cluttered, and decision-making becomes slow and confused. Smart traders simplify. They understand that clarity leads to confidence. They focus on a few tools they deeply understand rather than many they barely know. One of the most damaging habits of emotional traders is comparing themselves to others. They watch other traders' profits, social media posts, and highlight reels. They feel behind, inadequate, or pressured to perform. Smart traders focus inward. They measure success against their own plan and progress. They understand that comparison distorts reality and fuels emotional decisions. Patience is perhaps the rarest quality in trading. Emotional traders want fast results. They expect profits quickly and get frustrated when progress is slow. They jump strategies, markets, and styles, searching for a shortcut. Smart traders embrace the long game. They understand that mastery takes time, repetition, and resilience. They stick with one approach long enough to truly understand it. Emotional traders often believe trading should feel exciting. They chase adrenaline. They equate intensity with effectiveness. Smart traders aim for calm. When trading feels emotional, they know something is wrong. They strive to make decisions from a neutral mental state, where logic dominates impulse. Accountability is another key difference. Emotional traders blame external factors for losses: manipulation, news, brokers, algorithms. Smart traders take responsibility. They review their trades honestly and look for mistakes they can control. This mindset allows them to improve rather than repeat the same errors. The way traders respond to wins is just as telling as how they respond to losses. Emotional traders become overconfident after a win. They increase risk prematurely. They feel invincible. Smart traders treat wins the same as losses, with neutrality. They review what went right, stick to their rules, and avoid emotional spikes in confidence. Emotional traders often struggle with discipline because they rely on willpower. Smart traders design systems that reduce emotional involvement. They automate parts of their process, use checklists, and follow routines. They don't rely on motivation. They rely on structure. Another subtle difference is how traders view the market itself. Emotional traders see the market as something to beat, outsmart, or conquer. Smart traders see it as an environment to adapt to. They don't fight the market. They align with it. They accept what price is doing instead of arguing with it. Emotional traders frequently trade to feel something, to escape boredom, stress, or dissatisfaction in other areas of life. Smart traders trade for one reason only: execution of a statistical edge. They know that emotional needs have no place in decision-making. Learning styles differ as well. Emotional traders look for secrets and shortcuts. They hop from mentor to mentor, strategy to strategy. Smart traders focus on fundamentals and process. They refine execution rather than constantly reinventing their approach. Over time, emotional traders often burn out. The stress, inconsistency, and emotional swings take a toll. Smart traders build sustainability. They pace themselves, manage stress, and treat trading like a professional endeavor, not a casino game. The difference between smart traders and emotional traders is not talent. It's not access to information. It's not luck. It's behavior under pressure. It's the ability to remain calm when money is on the line. It's the willingness to do the boring, repetitive, disciplined work day after day. Anyone can become a smart trader, but it requires honesty. You must confront your emotional patterns. You must accept discomfort. You must be willing to slow down, to miss trades, to take losses gracefully. The market rewards discipline far more than intelligence. In the end, the market is the ultimate mirror. It reflects who you are under stress. Emotional traders see chaos and injustice. Smart traders see feedback. One reacts, the other responds. One hopes, the other plans. One trades emotions, the other trades probabilities. And that is the true difference.